BlackRock does have the $2 billion, which I have no doubt they do, and they try to put it all in tomorrow, price can jump a lot. Blockchain technology and crypto, Bitcoin, et cetera, does to financial services what the internet did to media and commerce. This is an asset that for the last year has traded about $8 billion a day. It just traded $23 billion in the last 24 hours.
The approval of the Bitcoin Spot ETF, with 11 confirmations received, marks a significant milestone in the world of cryptocurrency. This development is particularly encouraging for both the crypto market in general and Bitcoin specifically. The introduction of a spot Bitcoin ETF streamlines entry into the Bitcoin realm and other crypto asset classes, facilitating a more accessible avenue for new participants. As of this week, we anticipate a surge in Bitcoin transactions, potentially influencing the asset's price to reach around $3 billion market by the end of 2024 or the first quarter of 2025. Mark Yusko, a respected expert in Bitcoin and cryptocurrencies, provides valuable insights into the implications of the Bitcoin ETF approval. Investors should pay attention to his analysis, which delves into the opportunities and challenges associated with this development. Here is Mark critically examining the approval, shedding light on both positive aspects and potential drawbacks that might impact the Bitcoin Spot ETF unfavorably. For investors to gain a comprehensive understanding of the situation. Also, guys, only a small percentage of my viewers actually subscribe. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Let's turn our attention back to Mark as he elucidates the intricacies of this significant development.
Let's say it's 10 basis points. Okay, it's a reasonable expectation. Just dip your toe in, 10 basis points. That's $30 billion on an asset that trades $8 billion a day. Now, to Michael's point, if BlackRock does have the $2 billion, which I have no doubt they do, and they try to put it all in tomorrow, price can jump a lot. We can't take I actually think $3.5 billion is going to trade tomorrow. That's been my number for a while. At day one, $3.5 billion will come in. That's a problem. So, I mean, a good problem. The reality is it's not going to be 10 basis points. Let's say it's 100 basis points. 1%, which is not a crazy number. Now you're talking 300 billion, not tomorrow, but over some period of time. Again, to Michael's point, it'll take some time to educate and have some fancy ads and all that good stuff. But I think the really kind of amazing point of all of this is once UBS and Merrill put it in the model portfolio, it's over. Now, the caveat that I'm nervous about, I spent a lot of time doing some research on today. I don't know why I missed this, but they're releasing another freaking futures contract tomorrow. That is bad news. That is very bad news. And it's a big liquidity pool. So it's CME, and the guy who runs the CME is not our friend. So let's just put it lightly. And I do worry that spoofing, right, which is what they've been doing to gold forever, is going to start. And so that's the one little caveat that I think its number go up for a while, but the ability for spoofing now gets exponentially greater because the liquidity pool for futures, and what I mean by spoofing is you can basically go naked short in the futures market, right? That's why, when they issued the first futures contract in 2017, what happened? Boom, market went down. First futures ETF went down. BITO raised $1 billion on day one, 950 million, call it $1 billion. Today has $2 billion, despite the fact that they're down 31% since inception. And they were down 75, but they came back a little. But so think about, that's a crappy structure, right? It's got negative roll yield, it's a crappy structure, bad performance, and yet it still attracted more than $2 billion because the billion turned into 300 million, and then they raised another probably billion, and that then doubled. I guess they raised about 700 million, and that doubled to 2 billion. So I don't know. I'm a little nervous about that.
Do you guys have a sense of what the kind of yardstick is, or a sense for market expectation for, I don't know, flows on day one or week one or whatever, and the implications of exceeding or not exceeding whatever those expectations are?
Look, we had two flushes. I mean, two serious liquidity flushes in the past week. One on the matrix port, and then the second on the, put in the wrong day for the tweet. Actually, I do care, because I actually think it was intentional. I actually think it was a trial run for what's going to happen tomorrow, which that's the sinister part that scares me. I actually think it was a trial run for the short side.
This has been an internal Blockworks discussion when this happened. Who do you think looks bad? The SEC, crypto as an industry, or just nobody looks particularly good? And it's just a little bit silly on all counts.
Well, absolutely, the SEC looks idiotic, right? I mean, you can't even protect your own social media account. And the thing that's so funny is when they tried to make it about crypto, say, look, the crypto market is manipulated. Like, really? If you did that same thing with Microsoft or Nvidia or any other public company, the same damn thing would have happened. Don't say that was a crypto thing. That was a Wall Street thing. This was like when FTX went down and they're like, it's a crypto problem. I'm like, no, that's a bad person doing bad things problem. That had nothing to do with crypto. I think crypto, they try to make us look bad all the time, right? Because we have a lot of colorful characters. They are less, right? I mean, the early days, think about the early days of the Puerto Rico conferences and the crazy stuff that was going on, and you read the Bitcoin billionaires and the bake room and all that stuff. So you're right, there are fewer colorful characters. It's more serious now. We have real people in the bit. But ultimately, the reason the media, which is controlled by the same people that control finance, are going to paint this industry negatively at every chance is blockchain technology and crypto, Bitcoin, et cetera, does to financial services what the internet did to media and commerce. And there's no way to stop it, right? We've talked about this ad nauseum on Saturdays, is banks had an 838-year run. It's over. Now, it won't end tomorrow, but the 838-year monopoly on trust, it's over. It's over. And so as we do the X, right, as we go from one monopoly to another monopoly, which is sound real money, which can be cool in the future, that path is going to be rocky, and it's going to be dotted and littered with these attacks. But clearly, the SEC, they literally look like a clown show. Because here's the thing. Yes, boomers like me and my brethren and sistren, they're going to buy the ETF. But then they don't own Bitcoin. Okay, fine. When they pass, which all of us will, God willing, someday, we'll all pass, and $37 trillion is going to y'all. 37 trillion, not all of it to you two, but a lot, it's going to your generation. And guess what's going to happen? Some percentage of it then is going to leave the ETF and get converted into self-custody, or maybe someone will come up with a way that you don't have to memorize your damn seed phrase, and you don't have, there are some things we could do as an industry. No, it was that way to the beginning. Come on. It doesn't have to be the same way as the first day, right? And it will change. But to make this out to be negative, I tweeted out the supply demand, aggregate demand, aggregate supply curve today, right? It's pretty simple. We got two things going. We got a demand shift. Any way you look at it, there's going to be more demand for spot Bitcoin. Unlike the futures, any increase in demand. So when the demand curve shifts, P1 is higher than P0. That's guaranteed. Right? There's no debating it. Okay, that is absolutely guaranteed. Then we have a supply shock. So we have a supply shock coming. So now the supply curve moves. Now P2 is higher than P1. And so I don't understand why any maxi who already owns their bag would be unhappy. I really don't understand. Bitcoin in and of itself, it's this amazing thing. But if its only function is to sit on a ledger and bury it in the backyard, we can all just go home and go back to our old jobs, because we already got that. That's gold. And gold won't, decay buried in the backyard like a ledger might. So that isn't what this is all about, right? What this is all about is establishing the base layer of money, replacing gold as the base layer of money in every financial institution in the world, every central bank, every centralized organization and decentralized organization. But the migration from centralized to decentralized is not going to happen immediately. But every time we introduce new companies to facilitate new technology, that's what I love as a venture capitalist, is there are people building these solutions to help cross the chasm, right? Because if you're a bank, you're saying, well, Jesus, I don't really like this, the fact that I'm not necessary now. Michael can lend money to Michael without me. That's not good for me. Okay, well, how do I get in the middle of this? Okay, maybe I can be a custodian. Maybe I can be a record keeper. Maybe, they're going to be functions. And at least in the short term, there's going to be some role for fiat. It's kind of like energy, right? There's this whole thing about, we got to go electrification of everything. Okay, when? Like 30 years, 50 years, 100 years? It's going to be at least 30, probably 50, maybe 100 before we don't use oil and gas. Think about it. I mean, here's the crazy thing. We burn more coal today than in 1900. I just find so much of this incredibly compelling. Don't expect it to happen overnight. And I'll say the thing I don't like about what just happened in the past week, this race to the bottom on fees, bad decision. That was a very bad decision. I totally agree with that. And as far as the tailwinds go, the tailwinds are about to get big. I mean, I'm doing my 10 surprises thing tomorrow that I do every year. And one of them is I'm doing Rolling Stones songs this year for my 10 surprises. And one of them is Start Me Up. So money printer is going to get started up. And it's going to be big, like big. I mean, here's a stat that you won't believe. 30% of bank equity is unrealized losses on treasuries. That's 30% of bank equity, which, does that mean the whole banking industry is insolvent? Well, yes, that's what it means. And Caitlin would tell you that it's been that way since day one, and it's been that way for 838 years. But no, because the Fed opened up the temporary, I love that part, temporary lending facility. And so that skyrocketed. But the money printer is going to start going burr. That's big. The risks of recession, a year ago, almost 100% of economists said we were going to have recession. And we did. Asset that for last year has traded about $8 billion a day. It just traded $23 billion in the last 24 hours. So that's 3 times. Now, let's triple that again, because we haven't even started trading yet. Not only is voraciousness of the advertising going to be unbelievable, but the voraciousness of the buyers. And again, I switched on the comments, but man, they're coming in fast and furious. So if they don't like this, they can crucify me there, but I won't look at them. So the boomers, right? And I speak for the boomers as a boomer. They're going to buy because they don't control their assets.